Hey guys, welcome to our FX forecasting episode this Sunday. We hope you had an absolute awesome weekend and you are ready for the markets to come. We've got some big news coming out. I think let's just kick it off and start with the Airbnb IPO because that was just absolutely insane. So as I was just discussing with Elliot about the Airbnb IPO, that was absolutely mental what we saw in the markets and where it opened. I'm going to go a little bit more into detail about that just now. So this was the most anticipated IPO of the year. It ended on Thursday, on the 10th of December. We covered it last week in our weekly Sunday forecast video, saying about what we're expecting to happen, the excited side behind Airbnb, and whether or not you guys were interested in purchasing into that IPO. So the company listed more than 51 million shares, and the first day it was absolutely amazing. When it hit the markets, it opened at $146. This means that if you bought into the IPO, you would have seen at least 114% move to the upside, which is, as we can all imagine, it's pretty incredible to see that on the first day. So what an absolute huge move. Congratulations to all of my followers on YouTube and social media that went and bought into that Airbnb IPO at the initial price. This week we have seen some other IPOs go absolutely crazy in the market as well. Firstly, DoorDash, the largest food delivery company in the US, hit a staggering result as well when it listed on the market from the initial share price, up over 75%. Secondly, we had C3.ai. It's an AI software company that listed on the market. It was up over 138% from its initial share price on the IPO. If you want to get involved as a retail investor and join these IPOs that at the moment are proving to be some absolute staggering returns, we saw 75% there, 138%. Huge moves. Airbnb 114%. Then definitely check out Freedom Finance's platform where it's nice and easy to get involved in these IPOs. They have some really exciting IPOs that are upcoming, such as Wish, Upstart, Affirm, and Roblox. They're really easy to get involved with on the Freedom Finance platform. What I've done, guys, is I've chucked a link in the description below, which will take you over to their website, which is really easy to get started. All you need to do is open an account and submit your application for your chosen IPO that you want to be getting involved with. And guys, make sure that you do that application at least 1 or 2 days before to make sure that you get accepted. You also, guys, need to make sure you have enough funds to get involved in these IPOs. You need to have a minimum of $2,000 in your account with Freedom Finance. I will say, guys, there is the chance that you may not get your full allocation of these IPO shares as they are in a lot of demand. So make sure you head over there quickly and submit your application. So as you can imagine, getting discounted price of getting into these IPOs at a very early stage, or what you class as an early investor alongside institutions. A lot of these firms aren't allowed to sell their initial IPO shares for at least 90 days, and that's to stop a lot of selling on the open from these huge moves and getting in at a great price. So don't forget that when you get involved in these IPOs, that there is a lockup day of roughly 93 days before you can then go and sell your position. So bear that in mind and take that into account. And when you hit your 93-day lockup period, obviously the stocks are in your portfolio. You can do what you want with them. You can sell them, hold them, or do as you please. So really, really exciting working with Freedom Finance and looking at their IPOs. I mean, some staggering results that we have seen. I mean, when they told me last week what they quoted with a 60% return on investment, it's kind of shown it this week with what's capable with IPOs. So really looking forward to keeping you guys updated with what's coming out next as IPOs, as they really are hot on the market at the moment. So guys, we'll be covering a little bit more about the Airbnb IPO with Elliot later on. Let's get started now. Don't forget to thumbs up, comment and subscribe. Let's jump straight into our FX technical analysis. So starting off with Euro US dollar daily, we broke out of that range that we discussed last week. Expecting to have a little bit of a pullback, probably a couple of days more of selling before we then see a continuation move to the upside, assuming that we do get good Brexit information as well, affecting the euro as well as pound. So it'd be interesting to see what happens there. Overall, we've seen pretty much a choppy week, which is to be expected going into December trading period. We are expecting a lower amount of volatility in the markets, and we're expecting to see the price become choppy. When I mean less volatility, I mean less volume coming into the markets throughout the Christmas period. So expect the markets to be a little bit more range bound unless any major fundamental news comes out, and you'll see strong spikes from that. So expecting euro dollar here just to sell off back down to that low level and then rebound back to the highs. I don't really expect anything massive from euro dollar. until we get further clarification on some of the fundamental news around Brexit. But yeah, expecting price to drop down to that low and look to rebound higher. So that's the overview of what we're looking at on euro dollar, and that's just a little bit more of a close up. Expecting price to continue its move back down to those lows, sit around there for a little bit, and then start its journey back up to the highs of this range. So expecting price just to be bouncing between 2 points for majority of December, I would say, whilst we're waiting for that clear-cut sort of decision on Brexit news. Heading over to pound US dollar, as you can see here, this was our previous week's chart. We said watch out for that 1.35 level. We could see a sell-off and then a rebound. So what has happened? Were we right? We were indeed. So we saw price literally rebound off that 1.35 level, and it sold off a few days. I don't really expect the pound to sell off dramatically over this week unless we have bad news out on the fundamental side, which Elliot will cover in a little bit. But technically speaking, we should see price now start to maybe move down to that 1.3 level, reject 1.3 and sit sideways until we have further clarity of what is going on with this Brexit deal that's nearly there, not there, nearly there. So if we do see good news coming out of that, I expect this to go straight back up to 1.35. If not, we could see price drop as low as 1.25, which will be very interesting to see. But for now, we're at 1.31. Could see 1.3 in sight before we start seeing a little bit of a push higher. So as you can see there on the pound against the US dollar on the 15-minute time frame, I expect price to come all the way down to roughly 1.3. Could take a day, could take a few days, but either way, I reckon we'll be seeing that 1.3 in sight before we start seeing a move back up. And that's going to be based off of what we see from the fundamental news more so than technical analysis. So keep an eye out on that 1.3 level. Could be a great place to look to join back in to the move to the upside. Looking at US dollar against the Japanese yen, we've been listening out to a lot of institutions talking about what their oversight is and overview of what is going on with US dollar against the Japanese yen. And they are still expecting a bit more weakness to come into the US dollar against the Japanese yen for the rest of December and January before we then see a potential transition into the Biden administration. And then they're expecting more strength to come back in. So I don't really expect to see much now on US dollar against the Japanese yen. We could see it just ranging between these two tight zones for the rest of December, I would have thought. With a potential move to the downside. So looking to stay away now from US dollar against the Japanese yen. But here you can see, look how choppy it is over the last sort of week or two, bouncing between these two zones. And that's what I pretty much expected to carry on doing for a little while longer now, until we see that administration transition. So yeah, we can see that price. I'm predicting it to come back up to, almost like this downward sort of trend, and then just rebound back to the downside. So honestly, this week, I'd say from a technical point of view against US dollar against the Japanese yen, I'm still bearish, but I'm not trading it due to the lack of movement that I can see in the currency pair. Pound against the US dollar, I'm interested if we see 1.3 in sight, depending on the fundamental news. And euro against the US dollar, I'm also expecting a slight pullback before we see the continued rally. So actually, it looks like a bit of a hands-off sort of approach for me this week in trading against the FX pairs. Nothing majorly exciting and nothing that I really want to get my hands on and trade, which is fine. Again, going into the quiet month of December means less time trading on the FX pairs. So I'm going to hand over to Elliot, who's going to be giving us a quick roundup of what happened with that IPO Airbnb that we was discussing on last week's episode, which was super exciting and awesome to watch as well.
Cool, thanks Sam. That was interesting technical analysis. Like I say, December we normally see, trading sort of tail off a bit. However, there are quite some big fundamental news that we are expecting to come out soon or not come out, which could move the market either way. However, Airbnb, what a mad week it has been for IPOs. So you had the intro and the video of you know, going into a bit more detail. Just want to cover it a bit more, sort of what we thought and saw was going to happen last week and what actually happened. You know, crazy numbers here. So, like I said, started trading on the Nasdaq on Thursday, the 10th of December. Their initial target price range that Goldman Sachs, one of their underwriters, sort of came out and gave was between $44 and $50. And it actually their IPO listing price was $68. So, you know, crazy. They raised over $1 billion more than what they were expecting. So they raised $3.5 billion, whereas the initial range was between 2.3 and 2.6 billion. It then actually started trading, like we mentioned earlier on, over $144, which again up over 115% roughly. Crazy. It actually touched $165 during the trading day on Thursday.
Nuts.
And then settled down around 144. You know, crazy. Giving it a market cap around $100 billion. To put that into perspective, you know, we've got some competitors down there. So Booking, probably the biggest competitor, $83 billion, the valuation. And obviously Booking.com, they're not direct competitors. It's like obviously, you know, they aren't really competitors with Airbnb that we can directly compare with. But, you know, Booking.com, if you're going to book a holiday, I think most people would, you know, traditionally go to Booking.com if they're going to a hotel or abroad. So, you know, whereas if you went to Airbnb direct, you'd obviously book your accommodation directly through them. So some big numbers, worth more than Booking.com, where you can book the whole package, right? You know, flights, accommodation, everything. So
it's worth Booking.com and Expedia combined.
Yeah, exactly. So
well, nearly
and it's only been on the market. It's only been on the market for a day. So crazy numbers, and obviously, like we said, they're making a loss. So, but you know.
Yeah. Do we think it's worth 100 billion? I've got no idea if I think it's worth 100 billion. But hey, we'll find out. Hopefully, if they start turning a profit, they can maintain the share price that they're at.
Obviously, the market is looking at future valuations. What the potential of Airbnb is, you know, compared it to Tesla's price over earnings, which is, you know, over 1,000.
Yeah.
So, which is just, I mean, that's just mind-boggling, isn't it?
Well, yeah, I can't believe it. But I think, like I said, there must be some serious demand at the moment for IPOs, as we've seen from some of the other ones that we discussed earlier on. But a lot of these IPOs are doing minimum of sort of 50, 60+% on an IPO, and it'd be interesting to sort of track how they carry on throughout the the rest of this year and the first Q1, I suppose, of 2021, to see what the demand is. But at the moment, it seems ridiculously high to get hold of these IPO shares.
It's crazy, isn't it? And you've seen I think it was on Wednesday when it was DoorDash and that C3.
Yeah.
I think Nasdaq was down like 2%, and some of the stuff I was reading was money was coming out of traditional tech into these IPOs, which was obviously hitting the Nasdaq. But I mean, it's crazy, crazy numbers.
Fair play, especially if you got involved in it.
So what else happened this week? Obviously, we're sort of covering the same news that we have been now for the past month or two. But these are what's making the headlines, and they are sort of dragging their feet with them, especially Brexit. I mean, early in the week, it looked like, all happy days, Brexit's going to go through. As Sam mentioned on the technical analysis, we saw cable back up at 1.35. However, sort of Wednesday evening onwards, it now looks like the deal wasn't on the table. The deal still needs negotiating. Boris came out on Thursday evening and warned the UK public to prepare for no deal, which again is quite ominous, but is he still playing games? I think the market where it is at the moment, I think it's still pricing in a deal. It's still leaning towards a deal. Otherwise, I think we'd be much closer to sort of 1.25.
I think they will. They'll get like an absolute...
Yeah. Or it'll be an extension. Now that some I can't remember the name, EU official came out and said, they may do a friendly no-deal Brexit and extend talks into 2021. Yeah. So they won't like ground planes.
I don't think they can
like
afford it either with them in the middle of a pandemic. You know what I mean?
It's in both the EU and the UK's interest to get a deal over the line.
Yeah.
However, as of now, it's quite negative news that's coming out at the moment. It's especially hitting pound across all major pairs. We've seen quite a big sell-off on Friday morning. Another thing that's hitting the markets is a possible US stimulus deal. Again, this looks negative news at the moment. Republicans rejecting the latest deal proposed by Democrats. so which has hit the markets in the morning. I think that combined with the Brexit no deal has hit equities on Friday morning. Obviously, had Dow was down around 1%, FTSE was down about 1%. I mean, DAX was down nearly 2%. So we've seen a bit of a sell-off come into the market after hitting new highs this week. We'll go into a bit more about that. Some positive news was the EU stimulus deal we brought to you last week. So it looked like Hungary and Poland were trying to veto that deal. However, Germany basically stepped in and negotiated it, and now it's looking like they're going to pass that deal through, that $2.2 trillion deal with a €750 billion COVID relief
They
package.
basically said that we're going to pass the deal without you, and we'll just exclude you from the deal.
Yeah, and then they changed that, and then they brought them back in and said we'll include you now. So, and obviously we saw the ECB come out this week as well, plan to spend an additional 500 billion buying up bonds. However, they also came out and said we don't have to spend that all, which was part of the agreement with some of the ECB members, and they're also increasing bank subsidies to keep them lending, to keep credit flowing throughout the economy. So skipping back up the slides, we also saw Canada approve Pfizer's vaccine. I think they have the largest number of orders for that as well.
Really?
And the FDA advisors approved the Pfizer vaccine on Thursday, so that goes to full FDA approval, I think, in the coming days. So that's looking like that will get approved by the FDA, which is obviously good news. And on the back of that, really, we've seen oil sort of continue to move higher, close to $48, so back at sort of pre-COVID levels, which to think it was down at, $8 at one point.
Yeah, it was,
crazy.
$9-10 was when I got in. Yeah, really interesting to see that, and obviously we're seeing that roll over to the likes of Royal Dutch Shell and
so we're seeing the big the big FTSE mining companies, oil companies recovering as well.
Yeah.
So having a look at Dow Jones chart. So this was the hourly. Last week we mentioned about this trend line that had been respected since sort of mid-November, and how if that continued, we'd still see the bulls in charge, and we'd look to see sort of new all-time highs coming through. So this was the position we were at last week around here. And then we actually did see a pullback back to that trend line and a strong rally, and we saw fresh highs printed, albeit just above the previous high. However, towards the end of the week, we saw a more sustained sell-off. So another test of that trend line, bounced back up, and then sort of prices slowly sold off, and then we saw a clear breakthrough on Friday morning. So yeah, interesting to see what happened next. This was taken before the US market open on Friday, so I expect we'll see maybe a pullback towards a 29.9 level, 29.950, and if it comes back through this 30,000 level, I expect the bulls will be back in charge. However, it looks like bears might be in charge for now, especially if the US stimulus deal is off the table until after Christmas. But yeah, interesting. Moving over to FTSE 100, again we also saw fresh highs on that. So this is on the 4-hour chart. However, it's also been affected by the sell-off on Friday morning. More interest around sort of this area here. If we get a pullback to there, could see a continuation and a good entry to jump in long.
Yeah, it's interesting about FTSE as well, because we haven't seen sort of the index following the Dow Jones like it used to so much. So it's very, very interesting.
Yeah.
Like we've been talking about over the last couple of weeks, it looks like it's growing its own sort of thing, and it's doing what it wants.
Except on Friday, it has sort of when the US indices have been selling off, it's more just been going a bit sideways, and then rallying at any chance it can get, which is nice to see, and makes a change from the last 6 months.
So much,
Also brought gold back on. So around last week we were up here and we were saying, potentially a move back through this level could be very bullish. We did see that move back through that level. However, it was very short-lived, and now it's looking, again, quite bearish, especially if it breaks back through these lows here. But yeah, it's been quite volatile this week, gold. So one to keep an eye on for those gold traders out there. However, at the moment, it's getting a bit messy and choppy. Not something I've really touched. But so looking into next week, it's going to be more of the same, especially Brexit deal and stimulus deal. They're sort of the big ones. There looks to be like a deadline on Brexit on Sunday. However, I can see that being extended. US stimulus deal, I believe deadline for that for this year is going to be December the 18th before they break up for Christmas or the holidays. Busy economic calendar next week. We've got Inflation from UK and Euro coming out. We've got interest rate decisions from both the Fed and Bank of England. We've got a bunch of retail sales and a bunch of PMIs. So keep traders on their toes. However, it's December, so like Sam was mentioning, we expect to see lower trading volumes. However, it's a very heavy calendar week, and with the Brexit and US stimulus deal on the horizons,
We could see some shocks.
could see some moves in the markets.
So guys, we've got a busy week coming up. Don't forget to thumbs up, comment and subscribe. Be cautious. There's a lot of fundamental news that's coming out with very little volume in the markets, with traders taking the time off over Christmas. So be cautious and enjoy. Get in the comments below if you're enjoying our weekly analysis and if it's helping you with your trading. Take care, everyone.